So, welcome to Real Stories in Real Estate. I'm your host, Denise Laframboise, and today I have Steve with us, and he is an amazing realtor in Ottawa area, but he very much specializes in aging in place, downsizing. And so we're going to talk about some of the myths that we hear out in the world about this time in your life and really helping advise your family members when it is time for them to maybe look at leaving their family home or doing something with it. So I want to thank you so much for joining me today, Steve.
Well, thank you, and thank you for having me. This is fun. It's the first time I'm doing it, so
Right, amazing. We'll jump right into it. We were just talking about you do a lot of seminars, right?
yep, yeah. I stopped during COVID, but I am actually now in the process of getting three set up and three of the retirement residences locally. And I did attend one yesterday as a guest, and I was kind of appalled at some of the things that were said.
Okay, so let's talk about that. Like, what are some of the things that you hear, either that people ask you or maybe that you hear in other people's seminars that you think, I don't know that that's what you should be telling people?
Well, I think when you're first of all, don't fearmonger, because when you're sitting there talking about all these crazy things that could happen to you and misinformation that's out there, that's not what we're here. Our role is to help you as realtors and any field, yourselves included. I mean, find the right solution for people that fits their needs. And yesterday I went to watch, and it was supposed to be about finance, but he decided to talk about real estate for a while, and he was talking about the Ottawa market and how houses are taking a year to sell, and if you can't get the price you want, wait. And he was kind of pushing a product, HELOCs, which is home equity line of credits, so you can stay in your home and pay your bills and wait till you can get what you want for your house. But what he neglected to say was, you don't get what you want for your house. You get what the market says your house is worth.
Yeah.
So, and he was going on to say some houses have been on the market for a year. And I can tell him honestly, as a realtor, yes, there may be a realtor or two that would sit on a house for a year if a client would actually stay that long. My experience is if you don't get someone's house sold pretty quickly, they're going to fire you because you're not doing your job. But I don't take listings where clients say, I have to get a certain price. Because if it's not realistic, I'm not helping them and they're not helping me, because there is a cost to carrying them, both for the client and for myself. And to have a house sit for a year, that's not helping anybody. So, most agents that I know would
That's
not
not
take
super
a listing
common,
that way
right?
because it's
Like,
not helping anybody.
yeah. And I know even for ourselves, like we've had properties where like we wanted a certain price. If we didn't get it, like if the market doesn't dictate it, we take it off.
Exactly.
Right? Like, and you figure out a different strategy. And I mean, and that's where maybe we look at, like, I know there are situations where people really want to sell and they can't. And then you mentioned a HELOC. Well, yeah, a HELOC or a reverse mortgage or a standard mortgage, like they can all be tools that we can use to keep somebody in their house. But I could never say one is the best, right? Like they're all different depending on the situation, the age, who lives in the house. Are they capable of making payments? How much do they owe on the property? What do they have to pay off? Do they need access to money to pay for nursing care or something else or make the house accessible so they can stay in it? Right? All of these things determine which of these products are going to be the best fit for someone.
And that's kind of the approach I always take. Aging in place is always the first solution for people that are in a house that are older. The longer you can stay in your house, the better it is for your mental health and your physical health, because you're with friends, familiar neighborhoods. You may have activities you're doing. So yes, if you can stay in your house safely and you can afford to hire people to do some of the jobs that maybe you're not able to do anymore, um, or if you need in-home care and you can afford it, I know the government would prefer people to stay home, and they're trying to do better at having home care available, but it's not always possible. So then, yes, if it gets to the point where it's better for you to sell and move into a residence, or even if you're younger and you just want to travel and you don't want the headache of maintaining your home, you can sell and buy a condo or something smaller. Condos are better for that only because if you travel, less people know you're away. So you're less at risk, but you
And
still
less
have to.
maintenance, right?
Right?
Like, the people worry about condo fees, but you often think, well, then you don't have a surprise $6,000 furnace bill or, a roof that you all of a sudden have to pay to redo. You have a like known condo fees every month instead
Yeah,
for
and they
budgeting.
vary too. I mean, I don't do a lot of condos, but I've just done three actually. One I'm selling, and two that clients bought. And you can get condos where the condo fees include all your utilities as well. Like I have one client, that's exactly what they got. They're not paying water tax. They don't have to pay their hydro, heat, gas, anything. The only thing they pay is cable TV if they want it, and internet and a phone. Everything else is covered. So yes, it's a bit pricey, and you still have to make sure when you go in that your lawyer really takes care to check the condo documents to make sure you won't get a special assessment down the road and everything's healthy in the budget. But if you're in, yes, you don't have to pay for the windows and the roof and the shoveling and the landscaping. But you do have to, people always forget this. When you do travel, I don't care what house you're in, read your insurance policy because they do tell you if someone's not checking on your house and something goes wrong, you may not get paid.
Yeah.
So
Yeah.
if you go away for 2 whole weeks and something happens, your insurance company may decide since nobody was checking on the house for you, guess what? We don't want to cover that.
That's a really good tip.
Yeah, something. And that's when I was watching this person talk yesterday. And actually, I have a question for you because one of the things he said was that mortgage people will always push their clients into refinancing, but never into a HELOC because they don't make money if they do the HELOC. I actually know mortgage people that have actually told their clients in certain situations because it was a short-term solution. The HELOC was better.
Hmm.
They did not
Yeah.
tell them to go refinance a mortgage.
So when he's saying a blanket statement like that, I always feel like that's not really fair, right? I would say there are good and bad people in every industry. If somebody is doing this job correctly, they're doing it properly, they're prioritizing what the clients need, they're looking at the pros and cons, right? So times where we would use a HELOC, where it makes more sense. If somebody needs an interest only payment, maybe they need a reverse mortgage, but they're not old enough to qualify for enough. Sometimes we'll set up a HELOC and use it as a reverse mortgage. So you borrow this much money and then you have all the room. And instead of making payments, the payments tack on to the end of the HELOC. Maybe like financially they can't make monthly payments and they've got like a mortgage that's killing them to stay in their house. And a HELOC might be a solution that you could use to replace that mortgage and make their cash flow better, right? So that they can stay in their house, right? Similar to reverse mortgage can work the same way, right? You borrow this much money and then the payments go on top. The difference is like the interest rates might be slightly different. And the qualification is different, right? It's easier to get a line of credit. We can usually go up to 65% loan to value of the home, whereas reverse mortgage is much tighter. We have a lot of regulations in Canada, and depending on the ages of the people living in the home, they might be quite limited in how much they can borrow. So sometimes the line of credit, like a Manulife One, Scotia Step, TD Flex line, is a vehicle we will use until they are qualifying for a reverse mortgage that they want. Right. Sometimes they stay in that forever. It just really depends. And as you said, to somebody who's going to break a mortgage, right? If they're planning to sell a home, like a great example, somebody who's downsizing and they want to buy a condo, like what you talked about, and they have their home free and clear. That's great. How do they get to this condo? The ideal scenario is we put a large line of credit on their current home. Then they go out shopping for a condo. When they find it, they buy it for cash with the money from the line of credit. Then they own both properties. They only owe this line of credit on their current home, and they were able to buy without worrying about financing on the condo. Then they have time to move, age, sell, potentially own both properties for a while and rent one until they're ready to move into the condo. But when you have a matrimonial home that you've lived in for 30, 40, 50 years with your kids and your whole family and your whole life, that can take a long time to declutter, to stage, to decide what you're doing as you move out of it. So having a line of credit could be a really good vehicle to be able to do that. And then what happens once they move into the condo, you stage and you sell the other home. When the home sells, the line of credit just gets paid off and there's no penalty to break it because it's open. And then they are able to just get that paid off. And then the remaining of the money comes to them in their bank account for through the lawyer.
Yeah. I mean, and the other option too is if they're going to do that in that scenario, if they had children in the area or a family member that needed a place to live, they could actually rent their house to them, have them pay down the line of credit while they're in there, a certain amount every month. And they also avoid the vacant tax
Yeah,
possibility if they left
sure.
it empty for a longer period of time. So there's all, again, I'm like you. I don't like people that come up with like, here's a blanket statement.
Yeah, yeah, this is for everybody. It's
No,
not like I tell people I've had 19 different mortgages and they have not been the same and they have not been with the same lender and they haven't been the same product. Because I'm different, the properties are different, and the market is different every time. And if I took a 5-year fix with TD every time, I would say that's the best mortgage. We should all work for TD and just do that. But that's not always the best product.
no. And you got to watch pen. Like when I'm meeting clients for the first time and they're not pre-approved, I always say, I give them people I know that I can trust and they can trust. But I say, it's not just about the rate when they're saying, oh, I was going to go here because the rate's better. Pen,
Mhm,
what, like, where are you in your
mhm.
life? If you're starting out and you think you might actually change jobs and maybe even cities in the next 5, 6 years, watch what the penalties are. Can you pay it down quicker? Can you do accelerated payments? Can you do it biweekly, weekly, monthly? How much extra can you put down every year if you end up with some extra money in your hand at the end of the year?
Yeah, can you port it? Can you take it to a new house if you move? Can you offer it for assignment, right? Can somebody else take it over if you sell and you've got a great interest rate? Like, can somebody else take it over so you avoid a penalty? If you're going to need a line of credit in the future, do lenders go behind that lender or were you going to have to refinance to access a line of credit, right? There's a lot of different things that go into it. I know that everybody talks about rate because we think that's the most important part, and it's super important. But like for us, I mean, we have 60 different lenders or so and hundreds of different mortgage products. Like at any given day, the type of product you want, say you want a 3-year fixed or whatever you want, like we will have 20 different products all with the exact same best rate. So, what else inside that 16 pages of paperwork is going to save or cost you money?
Yep. And I know I had a conversation actually with my wife at one point because I told her that a couple of things. When you have a mortgage where it's insured because you put less than 20% down, that insurance also helps the homeowner, not just the bank. And she says, well, I don't think so. And I said, well, I've gone through 3 seminars with mortgage people that tell me it does.
I have clients that were approved for higher amortizations during COVID when they lost their jobs because they had insured mortgages, because the insurers allowed them to do that. Like I have seen it with my own eyes, right? The other thing that it helps with that people forget before 2016, things were a little different, right? And so if we bought our first house before then, sometimes we don't realize after that point, insured became only an option for like purchases and then for switches after that, right? We used to be able to do insured refinances. And so then what happened is now, if you have that insurance, you also get a lower interest rate now and a lower interest rate at renewal, right? You can switch lenders at renewal. Whereas like the refinances are at a higher interest rate and the 20% down purchases are at a higher interest rate. So you're saving paying the insurance, but you are costing yourself on rate. And so people don't always understand that. And it's really just because the lender's risk is offset, right? It's cheaper money because either the client's going to pay them back for those under 20% down mortgages or the insurance is going to kick in and pay them.
So yeah, and again, that comes down to more the person they're dealing with doesn't take the time to actually go through the paperwork with them, explain what all the benefits and what everything means to them. And yeah, the other like again, the gentleman I talked to yesterday, and what you got to watch. I don't watch the news when they talk about the real estate market because again, it's kind of more generic. It's not Ottawa specific. So when they're telling you that prices are going down and there's all this stuff, it's usually because of the impact of Toronto and Vancouver, which are huge markets. And on the whole Canadian market, yes, it can bring everything down 10 percentage points. But Ottawa may not be the same. We're always a bit different. But this gentleman yesterday was saying it's taking a year to sell a house and house values have dropped. And yes, there's been a correction. It doesn't take a year to sell a house. I mean, on my street between, I'd say beginning of October and December, 5 houses went up for sale. 4 sold within 2 weeks. One took a month, but it's because they overpriced it. I
Yeah.
couldn't understand why the agent did because it was the exact same house that sold down the street for $30,000 less, and they decided to ask for $40,000 more than that sold for. When they actually adjusted the price to that price, they got a little bit more than that house sold for. And the range was between 500 and 600,000. They're all townhouses, and the one that sold for 600, they actually had it in sunrooms, and that's why it sold for about 40,000 more than the average. And then yeah, I listed a condo, and condos in Ottawa are sitting. I believe the average days on market is sitting around 90, but I listed one and had it sold in a week.
Yeah.
I listed a detached home here in Orleans on a Thursday, and by the open house on Sunday, I had 2 offers and it got sold.
But I
So
think
if you
you're really right in saying, like, it's not only just, like, generic information, but sometimes it's not, like, things even change neighborhood specific. Certain
okay,
neighborhoods are more desirable,
yep,
or certain neighborhoods, there's more activity, more people want to move there or want to sell there, but it's also pricing. The pricing correctly, pricing based on what the market dictates. I know that there's lots of people out there that you want to list your house and you interview people and somebody says a crazy high price and you're like, this person can get a higher price. But if you're talking to a few people and they're all saying the same thing, chances are this one's actually out to lunch, not a better deal, right?
yeah, and that again, that's the point. I mean, the house I just sold was here in Orleans, the exact same house, same model, same street, a couple doors over. Both had unfinished basements. They both had hardwood everywhere. They were both very well kept. We still end up selling for $15,000 more than the other house did, and it was. We did bring in a stager. I put them in touch with a company to help them with the downsizing part, moving out the extra furniture. They had the budget for it, which was great. Not everybody does. I did a pre-inspection. I had a house inspector do a pre-inspection to make sure that nothing came up that they weren't aware of that could cause issues down the road, and also to make the buyers feel a little more secure because they know it's inspected. They still did their own. And again, nothing came up because some of the issues that did come up we had already fixed, but they were all minor anyway.
Can you
And
go
then,
back
yeah,
a little bit?
photos.
You said about a downsizing person. Can you tell me a little more about that?
Well, and then that's just like you said, Ottawa. If you ask me the Ottawa market, I can't give you an answer because we are like 200 micro markets. Orleans
Yes.
has 28 neighborhoods. They're all different. And
Yes.
it's the same thing with downsizing. It's different for every client. I've worked with clients where one lady, I met her in April and she was all gung ho. She had been referred to me by the person helping her downsize. And she says, yeah, I'm going to be in touch with you in a month. Well, it took her 6 months to go through packing everything up, going through everything in her house because it
Yeah.
was very emotional. She couldn't work more than 30 minutes a day packing up because she just get so caught up in it and start crying. And it was tough on her. They'd been in the house 30 years. Working with folks doing this, you also have to be, it's not the same as working with a first time buyer. You have to have a lot more patience and empathy. If you're not in it because you care, you're not going to service them as well. I mean, she
Yes.
would call me up. She had quotes for a paint job on her first floor just to touch up. And I told her, I said, since you're going to move out, that's not going to look good. We really need, if you can do it, let's just paint the whole first floor. So we got her some quotes and she called and was yelling and screaming at me on the phone because the person who quoted her on the touch ups quoted on a full job. And she understood that they were going to charge her both for the full job plus the touch ups. So, and it wasn't even someone I had referred to her, but she yelled and screamed at me for about 10 minutes, then hung up, called me back an hour later, apologized. And then I took the time to explain to her, no, if you do the touch ups, it's this price. If you do the full paint job, they're charging you this. And then she goes, why is your guy so much cheaper? I said, because he's a solo entrepreneur. He's got one truck and his garage at home. He doesn't have the overhead the other people do. And he only works with seniors. And she ended up using him and we worked through it. And a couple of times this happened. She'd call me up and get mad because someone else did. But yeah, it took 6 months and she kept calling and apologizing too to say, well, I know I said I'd be ready. And I said, it doesn't matter when you're ready. You're ready when you're ready. Let's
Yeah.
just make sure you're ready and you get through it. When the time's right, we'll get your house on the market. And we did. And we did have a couple issues. There was a structural issue in the foundation. The home builder actually added rooms in the basement for her, but he took out metal posts
Gosh.
and put in load bearing walls instead, which cracked the wall on one side. So we had an engineer come back in so we could save the offer, told us what we needed to do, what it would cost. We adjusted the price and the house got sold. So totally different.
Yeah.
And then I have
And
other
the thing
people that
about
they're gung
patience.
ho. They
Yeah,
just
the
go right at it.
patience piece is so good because I do find 2 types of clients. So these clients, like the downsizing clients and also the separation clients, like everybody says, I want to do this now, I'm ready. And then it just takes a lot longer for them to get ready than what they think. And we know this. because we do this all the time with lots of people every day, but it's the first time that they've done this, right? And so they don't realize like how much longer a lot of these things take.
Yep. Yeah, some are quick. I mean, I had one gentleman call me. There used to be a newspaper here in Ottawa called, I remember, it doesn't exist anymore. Unfortunately, the gentleman that ran it became ill and he had to give it up. But I was in this newspaper and this gentleman called me and he says, "Can you come see me? I have a condo for sale." So, and this is before we could do electronic signatures. So I used to be an efficiency specialist with General Electric. So I always print everything and have copies in my briefcase. So I showed up and I had all the comparables for him and I was going to tell him there's 12 units in this building for sale. It's not going to be quick. You're competing with that many people.
Lot, yeah.
Um, he had one bonus going for him. He had the main level. So he had an outdoor patio that was all nice and stone. But he explained to me, he says, my daughters have been trying to help me. They were trying to sell it on their own through Grapevine at the time. And he says, I love them for it, but it's not getting sold and I don't want them to have to deal with this anymore. So I went to pull out the comparables. He goes, no, just tell me what price you think I should go at. And do you have papers to sign? And I said, well, I do, but the goal wasn't really to get you signed today. He goes, no, I want to sign today. So we signed and luckily we got his house, the condo sold in 2 weeks. And in between that, he's like, I have my car for sale. Do you want to buy it? You know, anybody wants to buy it. And he was trying to sell everything off.
Right.
And about 4 months after we got through all this, I got a call from one of his daughters to say, unfortunately, he had passed away. And this
Oh,
is why he rushed all this, because he
he
didn't want to
knew.
pass away and leave his daughters to deal with it. So he was getting rid
Oh,
of everything on his own. So it went really quick. And that's the downside of working with seniors. Sometimes your clients aren't around that long to keep the relationships going. But
yeah. Yeah. But I mean, you know that you're helping people through a time when they really need you to.
yep. So, I mean, that was tough. And I've had others. I had one senior that we got 2 offers on his house, super, super low key guy. He was actually going to redo the lower roof on his house because he wanted to make sure whoever bought it with their family had nothing to worry about. And I said, well, Rod, you did your roof 5 years ago. Is it leaking? No. I said, well, why would you pay another 10 grand to fix your roof? It's not, I said, it's warranted and it's not leaking. You got ice shield, you're done. Now we've got 2 offers. And unfortunately, I guess the people that won out didn't really like having to pay more than asking. So of course, all of a sudden there was a repair that had to be done at the patio door that was exactly what they paid over asking. And I called a couple contractors and found it's basically about half that cost. And I'd get a warranty, but they said, no, if they don't get their guy, they're walking away. So I asked Rod if he wanted to do it. I said, look, they're taking advantage, which I don't like, but it's your house. What do you want to do? So he said, okay. You know, he had actually taken a quarter of his garage to make a huge mudroom for his kids when they were young. And
Uh-huh.
we did get a quote to put it back to a full 2-car garage when they didn't ask. So he said, look, I would have had to do that for somebody anyway. Let's just do what I want to move to my retirement residence. But then when the house was supposed to close in December, he called me a week before to say, someone changed the date on my utilities. And it turned out to be the buyer. Twice they actually bumped the date by 10 days, which meant this poor senior would have been paying their utilities for half a month.
Right.
And I wrote their agent twice. And I said, look, I don't know what's going on, but if I'm guessing it's your client because the utilities don't talk to each other. You can't change the date with one and automatically change them all.
Yeah.
And then finally, the second time she wrote back, oh, my client wants to change the possession date. And I was hoping in my mind that Rod would say no, and he did. But Rod actually went one step farther. He was actually left a snow removal contract in place for the new owners. It wasn't in the contract. He didn't have to do it. He just did it out of the goodness of his heart. But I got a call about a week before Christmas from the agent, actually an email saying, my client's big snowstorm. Nobody cleaned the driveway. Nobody came. Do you know why? It's the only time I was actually rude to someone. But I was going to answer. And then I said, no, I'm not going to answer because if you're too thick to figure it out, your client's tried to screw a senior. And he finally
Yeah.
stood up for himself and said, well, why am I giving you this $500 snow removal contract for free when you're trying to get free utilities out of me?
Yeah. Yeah.
Unethical.
Yeah. You nobody cleaned the driveway because you didn't pay them to.
Yeah.
That's
So
why
he
people.
actually canceled it without telling me and got his money back. So I'm thinking, yes, way to go, Rod. Because I hate when people take advantage. And that really
I agree with you.
peed me
I
off.
appreciate you sharing all this with me today. I think it's really going to help a few people just to hear that there are people out there who specialize in this, but also like that you fight for your clients and that you take the time to really like let them allow the time they need, but also like have the resources, the support, the painters, the people that they need to be able to manage this stage of their life. So I really appreciate that. Eve, if people want to reach out to you, want to find you and get a hold of you, how do they find you?
Well, I have websites, obviously.
Okay. What's the website?
seniorsrealtorottawa.ca,
Excellent.
or they can email me at steve@stevesicard.ca, or they can call me at 613-853-5807. I do answer fairly quickly, not within 5 minutes all the time, because if I'm with a client, that's their time, and I respect that. So I will get back to you when I'm done with their time. But yeah, if I'm not in the middle of a meeting with a client, then yeah, I'm pretty, usually within half an hour if I don't answer right away.
Well, I appreciate all of that. I appreciate you sharing with us today. This has been Real Stories in Real Estate. I'm your host, Denise Laframboise, and you can find these podcasts on iHeartRadio, Spotify, Apple, or anywhere else that you like to consume your podcasts. Thanks for joining us. Until next time.